Hello, this is Dave, and welcome to Equities Story. I'm here with the Wolf, and just say this is just general share advice and not personal advice, as per the disclaimer you can see here on the website. Oh, Wolfie, Wolfie, Wolfie. Firstly,
Mm-hmm.
before we actually look at the commodities, can we have a look at the general market? And obviously you can see the sort of tech stocks getting that little bit of a sell down today with more talk of interest rates and inflation creeping up in America. Um, if you look at the Nasdaq and you look at the Dow, um, which have had a pretty good last sort of, generally speaking, last sort of month, they come back up, yeah.
Mm-hmm.
Everyone might look at that and think, oh, great, everyone's, it's back on, the story's back on, the trends are back on, the world's, whoa, we're going, right? It's important to understand that the reason the market in America has done well is because we're at war in Europe. And because we're at war in Europe, and a war that could get worse and bigger, right? Especially with all the rhetoric that Biden is giving, right? Now, I'm not anti-Biden, don't get me wrong, right? But by calling Putin a war criminal, he's pinned him into a corner. Basically, you die fighting or you're going to go to trial. I mean, Putin now has got no choice. He's got to take this whole thing to the end, right? This is a battle to the end now. So there's no doubt that this war is going to be a longer war. It's going to, unless there's a miracle, but it's looking now. The chances are this war is going to be longer. It's going to be more intense, and equally, it could get a lot bigger. So what's happened is that all the fund managers have taken their money out of Europe and put it into the American market. Why wouldn't you if Europe's going to go to war? So this is what we've had that's helped this little bounce recently. It doesn't mean it's okay, right? It doesn't
Mm-hmm.
mean life's good again. It means it's so bad people don't really know where to put the money. Now, the other thing is what you've had is bond market. So bonds are going up, inflation's going up. So you're not people aren't throwing their money into bonds at the moment because the bonds will they'll be able to get better deals most probably in about a year and a half from now than what they can get now.
Mm-hmm.
So there's this sort of no alternative situation at the moment. You're worried about having your money in some of the European banks. How much debt have they got in Russia? How much money do the Russians owe them? I mean, there's massive issues across the board. So we've got serious problems, Wolf. Now, I know the charts hopefully will see us through over next year, 2 years,
They
but
always
it's
do.
right. Well, but it's going to be extremely tough, right? This year, we picked the right trends, we picked the stories, but this market for the rest of this year is going to be, Wolf, in my opinion, is going to be the bloody sort of week by week stuff, unfortunately.
I have to agree with that. And the thing is, and I think you've pretty much hit the head on the nail on the head, however you say it. But I think America shows that it is some sort of a safe haven for money, right? Stock wise, they've got the best tech stocks. They've probably got the best industrial stocks. So the money will probably keep flowing in there, but it will be very volatile. Obviously, they've got their own issues, even though they are fighting this war maybe from afar by providing rhetoric and providing weapons to Ukraine. They're still involved, and of course, there'll probably be other repercussions on that as well, with maybe China and some other things. So, we're all involved, unfortunately, with this in some way. We are going to see a lot of ups and downs over the next few weeks and months, because, like you said, I think the key here, when you think about what's going on right now, everything that's being driven and is driven by right now the Ukraine war. So if we don't see a resolution to end it anytime soon, it's just going to get worse. So, like you said, we might see further much higher inflation spikes, further disruptions in logistics. You might see incredible, spikes in commodity prices, all these sort of things. But then, unfortunately, that will probably lead to, like you said, to me earlier, you might lead to some places where there might be recessions and things. So we are coming into a very unknown, uncharted territory again, like we always do. So we just, like you said, you got to play week by week. We got to see how it goes. So look, I think we always go back to the same thing for the moment. Like we've been playing these war stories, we've been playing these dividend stocks. So again, we looking at defensives, looking at stuff it's worked for us over the last 6 to 8 weeks.
Yeah, definitely. And I'm going to give you, Wolf, right, a worst case scenario in the world, right?
Give me the worst case scenario so I can just get over and I can sleep at night. At least I know what might happen.
All right. I mean, the worst case scenario is, and this is the problem, is that everyone is under the impression that we can lift interest rates up 1 or 2%. And guess what? It's going to calm inflation down and inflation's going to go away. Now, if you actually look at the numbers, there's a number of economists I've been studying. To actually curb inflation, we need to get the interest rates need to be 5, 6, 7%, right? This isn't gonna. It's gonna happen. It's not gonna happen. So what you've got at the moment is the Fed saying, oh, we're just gonna raise rates in June. We're gonna start. We're just gonna go slowly. Come August, September, they'll have raised rates maybe, I don't know, 0.5%, 1%. And they're going to realize it makes no difference whatsoever. Inflation is still going through the roof. And guess what? The world's going to suddenly realize, hello, we've got a problem. So maybe, we're going down, right? We've got war. I don't think things are looking particularly good. We go down sideways. But I think come possibly August, September, when the world realizes we're going to need a lot higher interest rates, I think we have a much bigger correction on the markets, right? So maybe. Okay, so say for example we're down here, right? This is worst case scenario, right? But there's the opportunity. There's the opportunity to buy when obviously if you take a long-term point of view. So the other side to the coin is that we get peace in the next 2 weeks. I'm wrong about inflation, and we go and hit record highs in the next few months. I just don't know. But I always think with the stock market, you have to prepare yourself mentally for the worst, Wolf, not the best.
No, and you're right. But I think the most likely scenario is the first scenario where protracted war, high inflation, we got to raise the rates to 5%. So possibly going down on the back of volatility. And I suppose the issues that we're going to have, that we're going to slow down the growth. We're going to have potentially region by region problems. So I can see that for the first scenario probably happening much more than the second scenario where we're going to hit the record highs anytime soon.
So Wolf, let's have a look at some of the stocks that the world might look at. Okay, you're going to look at your Apples, and you're going to look at your Microsoft, and you're going to look at your Googles as storages as well. Somewhere to put your money where you think, right, hopefully it'll still be there in a year, right?
Yes.
We're going to have the war's going to get worse. You're going to be looking at the Lockheed Martins of the world, some of the biggest arms producers. You're going to be looking at Northrop NOC in America, LMT NOC. You've got to be looking at these stories, Wolf. You have to be, right? Because the war is a good chance it's going to get a lot worse, and I think.
Protracted is it's gonna last for 6 months at least, right? So definitely, and the US said they're going to keep sending weapons. So those, like you said, those defensive Northrop Grummons and Lockheed Martins and Boeings and all the other ones should do fairly well.
You're going to look at EOG, aren't you? Right, it's trending up nicely. These sort of all companies that will benefit from oil and gas plays. You're going to look at maybe some of our gold stories. You're going to have a look at the evolution. I mean, gold should do well, right? I know it's not having a good week this week, but actually gold, I'm a little bit surprised with the price action on these gold charts because gold actually isn't looking too bad. And
but you know what? Gold should be doing much better than it is. Much better than it is. So something's, I don't know, the market's just not interested to push it higher for some reason. I don't know what it is.
Yeah, but on the charts, gold's looking fine, Wolf. I'm not worried. It's above the trend.
No, but it should be doing much better, Dave. I know you're looking fine on the charts, but it should be doing much better than it is in a normal circumstances. Gold should be going through the roof, really.
Yeah, definitely. Well, I think it could do, right? So I'd be I'd be trying to, as long as my gold plays are above trend, I'd be holding them, right?
Fair enough. Fair enough.
You've got companies like, look at Johnson doing really well.
Yeah.
The world thinking, okay, let's go back to basics. We always need all the products at Johnson,
And
plaster.
that's the key word: need, not want,
Yeah.
need. So these companies are companies, they provide the needs for people to just go on by their daily lives.
Wolf, Grain Corp, these sort of companies in Australia, Grain Corp, Elders,
Mm-hmm.
they're looking very good. We talked about that ETF, food, a number of
Mm-hmm.
food companies. I mean, these are sort of things you'd have a look at. There's a
Yes.
number of ideas. I'd argue, look at Pepsi looking really good on the charts, right? Okay, what do we do when the world's collapsing? We all drink Pepsi. I don't know why we do that, but
It's a defensive stat. Dave, the stocks that always people come back to are the ones that have been around for 100 years, the ones that have got a fairly predictable cash flows, and through thick and thin, they can still probably eke out some sort of a profit.
and Wolf, the other side of course is dividend plays. Now we put out a number of dividend plays, and
Yep.
there's three dividend plays, which are if you could tell us exactly what they're paying, that would be helpful, Wolf. But Coles, the defensive story, where again just breaking out. We said the other day we liked it. Looks good. It's got a nice little breakout. Looks like maybe it could go and retest $19. But again, a good dividend play. And what are they giving us now, Wolfie?
All right, let me have a look. But again, Coles is an essential. You've got to have buy food to survive. So, they're going to be a very, very good defensive story. And they are paying on our little dividend list is 5%, Dave, 5%.
Well, it's very good, especially if it means they're going to keep us all alive.
Yeah,
You're very wise, Wolf, about food. We need food to survive. You're full of it. You come out with things. You come out, and I say to myself, "Oh my God, I know why he's our lead analyst." Whoever you would know that?
imagine standing in front of the audience of
Yeah,
global proportions and saying, guys, food is essential. And everyone
yeah.
goes, oh, I didn't know that.
Yeah, so if only you could make fish appear from the sea, like
I know.
maybe you could,
Genius, mate, genius.
maybe you could be the next. We need another coming at the moment.
Messiah. Yes, exactly.
We,
That's
we,
me.
the, Wolf. So
Yeah.
Coles,
Yes.
good dividend play. That's a good idea for people, right?
Uh-huh.
So JYC, this is another dividend player. Wolf, what are they giving at the moment, Wolfie?
7.5.
I'm just trying to include you in this conversation by asking you a few questions.
That's okay. I'm happy to just sit back and listen to you.
Seven and a half, not too bad. And Wolfie, PTL again, the little breakup, not looking too bad. What are they giving us?
And they are giving you 10.
Wow, 10%, like it, right? So there's three dividend stocks there, and dividend plays. If you take the long-term approach, where you're getting some sort of return on your money, absolutely get it, right? Next 2 or 3 years is going to be really, really tough. So, Wolf, going forward, and I think this video is just a little bit of a wake-up call to everyone with equity story. In this market right now, we've got to be 100% watching the ball, right? If you're going to go on holiday, watch out. Still make sure you watch our videos, because this market it could day by day is turning on a dime.
If I was going on a holiday, Dave, I certainly wouldn't be trading.
Well, precisely, but even with your long-term investments, you've got to watch so you don't break.
Of course, you've got to keep an eye on the ball. But for a trader out there, and we've got a lot of them, if I'm going for a 2-week holiday, I certainly would not be trading.
So what we've done today, guys, we just sort of just trying to set you the picture that the next year is going to be very, 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 very difficult, and it's going to be a really hard year. But there's going to be pockets like we've seen recently. We've seen pockets like coal. Coal's having a spike. Let's get on the coal. I think gold will have that moment for us sometime in the next 2 months. And we're going to get these pockets of little trends that we can follow, Wolf, and we can scalp. Horrible word I use a lot, but we can scalp money off these trends, right? But the warnings are here. This is going to be a very, very, very difficult and very, very tough environment to invest in.
Agree. It is. like you said, we're prepared for it, of course, and we're going to be playing it week by week. This is the common thing for us. We're like a football club, Dave. We take things week by week.
Yeah, definitely. And I think the important thing when you get this type, members need to have a more sensible aspiration of what they can make in this market.
Mm.
Don't don't think you're going to make crazy 30, 40, 50% returns. And I know some people have done really well recently on some of these commodity runs that have done absolutely brilliantly for us. But be prepared, guys. This is going to be extremely hard, and and it's going to be a very, very, very tough market going forward. And but we'll be looking at the stories. We'll be looking at the stories that can benefit of this. Wolf will be looking at the stories that could do quite well. And day by day we'll hopefully come up with ways that we can try and scalp this market and sort of basically beat the market returns.
Yeah, this is the thing, Dave. I never get down on the markets, right? I understand that the markets has its ups and downs. Sometimes you're going to get an absolutely terrible year. We might have this year as a terrible year. You just don't know, right? So far, it's been fairly volatile. But there's always opportunities, even in a bad year, to even set yourself up for the next 5 years. So that's how we're going to be taking our investments. As if things are looking pretty grim, then we're going to be identifying stocks to buy, and vice versa. So it's always something to do.
All right, Wolf. Just saying about stocks that are looking good. I mean, I think ALG Ardent not looking too bad. See where it is by the end of the week, and maybe that could be an interesting one for Einstein's on the weekend.
Okay.
All right. On that note, now we've depressed everyone, and we've just basically sent everybody to the bottom.
You have been depressing everyone. I've just been sort of sitting back and just enjoying the depressing session.
No, that's good. No, but we've got to be prepared, warned, and I think at the end of the day, what we're trying to do is prepare you mentally for the sort of stocks that we need to start looking at maybe going forward.
Yeah, look, we're keeping it real. I mean, we're not going to sugarcoat things if things are looking pretty grim. We just got to say it how it is.
And other stocks that, I mean, if it comes, it's had a bit of a run, Berkshire, but again, when times get tough, this is the stock to buy if it could get back to around that 320. Reason being, they've got absolute billions and billions and billions of dollars in cash, and the old Mr. Buffett is.
Dave, he's done it before, right? I remember GFC. There was companies on their knees, and he went, "All right, I'll help you out." He bought, I remember, Goldman Sachs at a ridiculous cheap price. He made absolute mozza on that. So he's just waiting.
No, he's just, well, he's waiting for his cash. So again, this is the sort of company that you'd be having a look at.
Absolutely.
Berkshire.
320. It comes back to 320. I'm a buyer.
All right. No official trades out today, but just lots of ideas and a little bit of a sort of a market warning that we're going to have to be really, really careful this year.
Yep.
All right. Thanks, Wolfie. See you, mate.
Thanks, guys.
Bye.
Bye.